Alright, hi guys, I'm here to do a market update for the first quarter of 2018. For those of you who have watched my outlook and opportunities for 2018 in January, I said that I was bullish on the markets this year. I was bullish on the US markets because it was on an uptrend and I expect the trend to continue for now. And I was also even more bullish on Asian markets, especially the Hong Kong markets, where markets were more undervalued and showed even stronger growth potential. And they were also in a very strong uptrend. So 3 months into the year, let's see what has happened. Am I still bullish or have I turned bearish on certain parts of the market? So let's take a quick look. So the first thing is I'm looking at the S&P 500. And in the last couple of months, we had the biggest correction in the US markets in over 2 years. And we had an over 10% correction. And the correction happened in February, somewhere over here. Okay, and a lot of people panic and they say, you know what, the trend has ended, it's the start of a bear market. I didn't see it that way. And I still see it as a very healthy correction. Because for the last 2 years, the market has gone up with very low volatility, with very small corrections. And it was really overvalued, pretty much overvalued. So I think this was a very healthy correction to bring the market down before it can go higher. So right now, it is not a change in the major trend yet. It is still a very clear uptrend with the 50 above the 150 moving average and price remaining above the 200 moving average. So medium and long-term uptrend is still up, but we are on a short-term downtrend. We are in a short-term correction within the bigger uptrend. So because of that, I think it's a healthy correction for now. So what happened was we had that correction over there, and the market found support at the 150 and 200 moving average, and it found support with a bullish pin bar, which you know is a strong reversal pattern. So there are many traders and investors that actually started buying there. I was one of them. I added to my positions over there with, of course, a stop loss below that level. Okay, so the market did go up as we anticipated, but it could not stay above the 50 moving average. Okay, it formed a bit of a double top pattern and then came back down again. And what happened was in the last few days, again, it found support at the 200 moving average. So you can see again, the 200 moving average is a very strong level of support. In fact, it is the last level of defense for an uptrend. Now, that doesn't mean to say that when the price breaks below the 200-day, it's a downtrend. No, it doesn't mean that, because the 200 moving average has to slope down to confirm a downtrend. The 50 moving average has to cross below the 150 to confirm a downtrend. So that has not happened yet. We are still not in a bear market. As of now, we are still in a short-term correction. Again, although the 20 EMA is below the 40 EMA, signaling a short-term downtrend, but again, the medium to long-term trend is still up, which means it is still an opportunity to go long if you're medium to a long-term investor. And you could also take a short-term trade right now because it looks like it's bouncing off the 200-day. What happened a few days ago was we saw these red candles going down, right? Red. It was kind of like bearish for many days, and we had this first bullish candle that is what we call a one white soldier pattern. Okay, so one white soldier pattern is a bullish reversal pattern because after many red candles, it formed the first bullish candle that opened above the close of the bearish candle. So the bullish candle opens above the close of the bearish candle, and it closes above the high of the bearish candle. So that is a strong reversal pattern. So that could have been a potential, again, long entry over there, again with your stop loss below the 200 moving average. And what happened was the market did go higher, but sold off again. Okay, so that seemed like it didn't work. But again, it stayed above the 200 moving average. And as of Friday's close, we had another one white soldier pattern that formed that again managed to close above the high of the bearish candle and in fact, again, close above the 150-day moving average. So for now, it's looking still safe from a bullish perspective. So if it stays above the 200-day, good chance the market will continue to go up. All right, so I'm still bullish on the market for now because we are again still in a long-term to medium-term uptrend. Right. So again, if you had entered the S&P, again you can't buy the S&P itself. You have to buy the SPY, which is the S&P 500 ETF. Let me put it in. Here we go. So this is the ETF, right? So again, if you had bought over there and your stop loss was again below the low of this candle, or again you could put your stop loss about one average true range below the 200 support, or if you're more of a medium-term investor, you could put your stop loss below the previous swing low over there. All right, so again, all those are valid stop loss levels. Okay, so if you had done that, you would see that it has not hit the stop loss yet. It is still, again, you're still within the trade. And if you're not in the trade yet, again, you could take a potential long entry above the high of this candle. So again, on Monday when the market opens after Easter, if the market can continue to stay, or rather if the market can go up and go above the high of the last Thursday's candle, then there's a good chance that this guy will continue its trend. Okay. And from here, now usually I only like to take long trades. I only like to go long when I see the overall market, the overall index is above the 50 moving average or above the 20 exponential moving average. Because only when the market is overall bullish do I want to take individual long positions on individual companies. Now, for now, you can see the market is below the 50 moving average. So it's not that bullish, right? It's below the 20 EMA, not that bullish. But I may still, or in fact, I'm going to take some long positions on stocks because it is at the 200 moving average. So that is a strong level of support, which again, if it's able to continue on Monday, I see that as a strong bounce up. So because of that, I am looking at taking some long trades on individual stocks that are fundamentally strong and are also on a clear uptrend themselves. So there are a few stocks I'm looking at for potential entry on Monday. One is SPGI. Okay. So you can see SPGI is on a clear uptrend, and again you can see every time it makes a correction it finds support at the 50 moving average. Okay, and currently again it is finding support at the 50 moving average. So this could be a potential entry if the price exceeds the high of this candle to go long on this stock. Okay. Another one is ALGT. Again, you can see it's on a clear uptrend. And again, you can see the very nice wave pattern. Finding support at the 50, support at the 50, support at the 50. So when you see a very, very clear pattern, it is a worthwhile trade to take, right? With a nice risk to return ratio. Again, it could be an entry over there above the high of the last candle. Stop loss could be somewhere over there to catch the next wave up. Okay. So there are a couple of great companies, fundamentally strong companies that are showing that dip on the uptrend pattern, which is a very nice low risk entry into a uptrending stock. Another one is WTFC. Okay. So this one is kind of like, well, it broke below the 50. You can see 50 is the first level of support over there, 50 moving average support. It broke below the 50 as you can see, but the next level was it found support at the 150. So again, if it can go back above the 50 moving average, That's a very nice buy entry over there if it goes above the 50 moving average to catch the next wave up. So again, that's another potential entry. Another one is a TBBK. Okay, so the next one is TBBK, and again you can see this is the stock which is again a very nice uptrending pattern. And again you can see finding support at the 50 moving average. So again, very nice potential long entry over there. Let me just zoom in. Okay. Yeah, so you can see nice buy opportunity over there, stop loss somewhere over there, and again we could catch the next wave of the trend up. So like I said, usually I only like to take long trades if the overall market is very bullish, right? The S&P 500 is above the 50 moving average or 20 moving average, but it is not. It is below the 20, it's below the 50, but because it's at the 200-day moving average, which is one of the strongest support levels, the last line of defense, if we can continue to stay above and bounce, that's a great entry opportunity to go long right now. Okay, so that's the US market I'm looking at. Now let's take a look at some of the Asian markets. Let's look at Singapore, right? And again, Singapore is also showing a very nice potential entry opportunity right now. Again, you can see it's on a very nice uptrend. Again, with the 50 moving average above the 150, above the 200. And again, you can see you've got impulse, corrective wave, impulse, corrective wave. And again, finding support at the 150 moving average, right? Very strong support at the 150, went up, and again, finding support at 150, right? So very strong support is right now at the 150 support. So again, very nice entry trade opportunity. And every time, remember that when you take a trade, you're not predicting the future. No one can predict where prices are going. All we're doing is to take a low risk entry with a probability of where the market could go. So because of that, the key is always risk management. Amateurs always think about how much money they can make, when they are right, and they think I'll always be right. But professionals, before we enter a trade, we always ask ourselves, how much am I willing to lose if this doesn't work out? And we know that any trade we go into could be a losing trade. And that's the discipline and the psychology of a winning trader. Because to win in the long run, you have to lose sometimes to win eventually. All right? You have to cut losses when you're wrong. So because of that, although I say it's a great buying opportunity, I'll put a buy order somewhere over there. Okay, I'll only buy if the price is able to exceed the high of this candle, right? Because right now it's going down, right? I always say you never predict the market. Always wait for a confirmation. So you always wait for it to bounce up and catch the next wave up. So put a buy order over there. And again, you could put a stop loss somewhere here, about 1 ATR below the 150 moving average. Or you could put a stop loss below the previous swing low as well. So all these are valid places to place your stop loss, all right, in case it breaks down. Because again, anything can happen in the markets, right? So that's the Singapore market, again, looking bullish, all right? And looking at the Hong Kong markets, let me look at Hong Kong. So this is the Hang Seng index, again on a very clear uptrend, finding support at the 50, at the 50, at the 50, at the 50. You can see it kind of like broke below the 50, but again, finding support at the 150. All right, so again, moving averages act as levels of support. Okay, and again, the 200 is the strongest level. So as of now, you can see that okay, it made a correction down, and there's a bullish pin bar, right? So there's a bullish pin bar. So again, if you want to be a bit more cautious, wait for a confirmation candle, which is a bullish candle, to close above that bullish pin bar before taking an entry. Okay, so you could also see a level of support over there as well, right? So you can see this was a resistance, broke and became support, became support, became support. So it's resting on a very nice support level. And again, if it can bounce, there will be a nice entry back to the previous high over there. So again, there's a nice trade opportunity. Again, if you're a bit more gung-ho, you could put a buy order above the high of the bullish spin candle, a bit more conservative. Wait for a bullish candle to close above the high of the bullish pin bar to confirm that trade entry. Okay. I've also mentioned at the beginning of the year that I was bullish on the US markets, but I'm even more bullish on emerging markets. Okay, so for emerging markets, I look at this ETF known as the BKF. So the BKF is basically the Brazil, Russia, India, and China markets roll into one ETF. Okay, and these are emerging markets. And again, you can see it's on a very nice uptrend over there. You can see very strong support at the 150 moving average. Okay, bounced up, came back down, retest of the 150 moving average. Okay, so again, very nice potential opportunity to get in over here to catch the next wave up. But again, put a stop loss somewhere there. One average true range below the 150 moving average, or you can put a stop loss below the previous swing low. So all these are valid stop loss levels. If you're more of a swing trader, more gung-ho, then again, you could put a stop loss just below the low of the bearish candle. So again, where you place the stop loss depends on how aggressive you are. Are you a short-term, medium-term, or long-term investor? But these are all valid swing low patterns. Another ETF that tracks emerging markets is the EEM, the Emerging Markets Index. And again, you can see bounce off the 150, bounce off the 150, same pattern over there. All right. So to summarize, I am still looking at the markets in bullish mode for as far as the medium to the long term is concerned. We are in a short-term correction. I say it's a healthy correction, and as long as it remains above the key moving averages, this is a very nice entry point to get in before the next wave up. So let's take a look at the last thing. Wait, before that, let me talk a bit about Facebook as well. All right. So a lot of people have been asking me, hey, Facebook has had quite a recent sell-off, all right, because of the scandal that's happening with Facebook using people's data and selling the data and people misusing the data. And so the question is this a good buying opportunity for Facebook, or should we stay out of it? Okay. Now again, no one can predict the future, so it's all about risk to return. It's all about probability. Now, from a technical perspective, looking at the charts, people say the charts don't look very good. Why? Let's take a look at why. Why don't the charts look good? Because it looks like the uptrend is broken. All right, this looks like a break of the uptrend because the price has broken all the moving averages. It broke the 50, the 1, 200, and it's right now, in below the moving averages, right? Now, I've mentioned before again, just because a stock breaks the 200 moving average, the red line, which is the last line of defense, doesn't mean it's on a bear market yet. Because the 200-day moving average has to slope down to confirm the bear market. Right now, it's flattening. It's not sloping down yet. So not just yet. I wouldn't call a bear market in Facebook yet. And the 50 has not crossed below the 150 yet. Okay? So on a technical perspective, it is not on a major downtrend yet. It is close to it, but not just yet. Okay? The good news, or rather the bullish news about Facebook is, let me just remove the study so it's a bit cleaner. Okay, there we go. The bullish news is, if you take a look at support and resistance, you can see that there is a strong level of support over there. Okay, so the price broke the moving averages, but it found the support at this level. Okay, and in fact, it bounced off the support excuse me, with a very strong bullish pin bar. Okay, a very strong bullish candle, which rejected the support level. So although it turned red, but it is still a bullish pin bar because it's got a very long shadow that rejected the sellers, and the buyers pushed the price up again. So there were many traders who put a buy order above the high of that candle, a stop loss over there, and it did exceed the high, got triggered. It looked like it was going to fail, but it came back up again. All right, so as of now, it still looks that it could be bouncing back up, okay? Because on Friday, Facebook actually closed, excuse me, Facebook looked like it closed with a very strong bullish candle, okay? So if you're not in Facebook yet, you could potentially put a buy order above the high of this candle, okay? And a stop loss below the bullish pin candle. So that would be your potential risk you're taking in case it fails. But you have a potential reward to its high of about 2R. So you're risking $1 to make $2. So it is a potential trade to take to catch Facebook as it bounces back up. So that's from a technical perspective. Now, from a fundamental perspective, I think that Facebook is a great buy from a fundamental perspective because, let's face it, Facebook has got one of the strongest growth rates of any tech company. And based on its intrinsic value, which I calculated in the last video, its valuation is about, if I'm not wrong, what was it? I think $190 its valuation, and it's selling at $160. So it's selling about 20% below valuation. So it's selling at a discount to its intrinsic value. It is undervalued. So this is what I call a turnaround stock, which means a good company, fundamentally strong, hit by bad news. Now the question you're going to ask is this bad news temporary? Would they eventually sort out the bad news and move on with their life and continue growing, or is it over? And if you ask me, based on my little survey, I've been asking many people, hey, have you heard of this scandal? And first of all, I can tell you that more than half of the people I asked did not even know of this scandal because these guys don't even read the news, right? And those that heard of this scandal, and I said, because of that, are you going to delete Facebook? And I can tell you that 90% or more of the people said, I'm not going to delete Facebook. I spent the last 10, 15 years building my contacts. I've got so much information, I'm not going to delete Facebook. So if you ask me, I think there are some pissed off people deleting Facebook like Elon Musk or Jim Carrey just to make a stand. But if you tell me, majority of people are still staying on Facebook because it's still the number one social networking site. There's nowhere else to go. Let me say, how about Instagram? You can go to Instagram, right? Yeah. But Instagram is owned by Facebook. Okay? It's the same company, right? So if you ask me, I think if you take a medium-term perspective, I think Facebook is a great buy right now. And I've got a position in Facebook. Disclaimer, I've already bought a position in Facebook. I have a position there. And I'm potentially adding on to my position right now. But again, like I said, with everything, manage your risk because it can still fail and go into a bear stock. All right. So for now, I'm still bullish on Facebook. Okay. Okay. So finally, let me talk about Bitcoin. So I've been, I said I remain bullish on US markets, Asian markets. Now, one thing I'm no longer bullish on right now is Bitcoin. I've turned pretty bearish. All right, and I'll tell you why. So let's look at the charts on Bitcoin. So you can see that over here, it bounced off the 200 moving average. Looked pretty good. It started recovering and we thought, okay, we're out of the woods. We're going to make a new high. And it didn't continue its momentum, right? It came back down again, attempted to test the 200 moving average, but broke down. Okay. So what's happened right now, if you take a look, is now the 50 moving average has crossed the 150. And the moment now the 150 is still sloping up. So it's still not a bear market yet. Now, here's the thing. The moment this green line starts flattening and sloping down, and the 50 remains below the 150, we are in a bear market for Bitcoin. And what a bear market means is that it could continue going down for the next 2 to 3 years. It could drop 50% or even 60% from where it is right now. And I've said before, Bitcoin, unlike stocks, is not actually a company making stuff. It's a concept, right? So I'm not surprised if Bitcoin goes to zero. I've said it before, I said it again, right? I'm not surprised if Bitcoin goes to $1 million, it goes to zero. Anything can happen because Bitcoin is just a bunch of digits that people put together, right? So, like I said, if you ever put your money into cryptocurrencies and Bitcoin, put the amount you can afford to lose and you don't care about it, right? Treat it like a lottery money, okay? Don't put any more than you can afford to lose because this guy could go to zero, all right, if it really goes bearish. So as of now, like I said, it's really at the edge of bearish territory, okay? So now the 200 is still sloping up, so again, that's okay. Like again, the moment this red line slopes down and the green line slopes down, then I would not want to hold any Bitcoin positions, okay? Because again, it would mean that it's the start of a major bear market. And again, how low it goes, no one knows, okay? And now, not to say that a bear market will last forever. It could again reverse back into a bull market, right? But the moment it goes into a bear market, you got to get out, you got to exit, right? Park it in cash, put it in the stock market, put it in something else, and let the bear market play itself out before getting back in again. All right, and again, no one can predict when that will happen, but you got to get out once it turns bear, which it could very soon in the next few days. Right now, if you're looking at the short-term trends, you could take a look at. Let me just remove the 50, 150, and 200, and the 50. That's right. Okay. So what I have put in here is the very short-term moving average, which is basically the 20 and the 40 moving average, right? So you could also enter long if the 20, which is the red line, crosses above the 40 blue line. As of now, as long as the 20 moving average, the red line is below the blue line, you don't enter, all right, because it is a short-term downtrend. You have to wait for a reversal. Now, if you take a look at the history of Bitcoin, it reacts very well to the 2040 exponential moving average. I'm just going to scroll back for a few years, right? Scroll back to a few years. And you can see how well this moving average works. Let me just scroll back, scroll back, scroll back, scroll back, scroll back, scroll back. Okay, so I've scrolled back to about 2 years ago. And again, you can see that whenever the 20 crosses above the 40, you can see the red above the blue, that is an short-term uptrend signal. So there'll be a buy. This is a buy signal, right? And then you get in, you write the trend, and that's a sell signal over there. All right, sell, because you can see the 20 crossing below the 40. So you buy there, you sell there, you make a pretty nice profit over there. Okay, and again, you can see there's a buy signal over here, right? The 20 crossing above the 40, again, buying over there. And where would you sell? Oops. You can see that, yeah, you would sell somewhere over here, where again, the 20 cross below the 40, right? So you buy over here, buy over here. Sorry, let me just read it. Right, buy over here and sell over here, and again you catch a pretty nice profit over there. So the 2040 works very well on Bitcoin because it's a very trending asset. It works well on trending assets, and again you could see again another buy here, 20 crossing 40. There's a buy there. And again, you can see crossing over, there's a sell over there. Again, making a pretty nice profit along the way. So the 2040 is one that you need to respect, all right, to look at the short-term trends. And again, you can see another one over here, right, where the 20 crosses the 40. So again, that's a buy order over here, and that's a sell over there, right? So you buy over there, you sell over there. Again, you make a pretty nice profit over there, right? Again, you can see 20 crossing 40. There's a buy over there. And did it cross over here? Let me see. Yeah, it did cross a bit over there. So it could be a sell over there. Then it crossed back above. You could buy it back and ride the trend up again. Okay. So you can take a look at how it has been working. Let me just zoom to where we are right now. There we go. So you can see that at this crossover, this was a short-term downtrend. Okay. And you can see it attempted to rally back, but the 20 never crossed above the 40. So, and that's why it's going down right now. There we go. Okay. So the moment that happened, all right, it's a very clear down. So you want to wait for a crossover before considering a re-entry into Bitcoin. So currently bearish on the short term, and it looks like medium to long term it could also turn bearish. All right, so that's my update for the markets for quarter 1. If you've got any questions, post it on the comment section. Send me an email. I'll be glad to answer your questions. This is Adam Khoo, and have a great Easter. Hi, so if you like the video, you can subscribe for more videos by clicking the subscribe button. If you want to find out more about our live training courses in Asia, go to wealthacademyglobal.com. For online professional stock and forex trading courses, you can go to piranhaprofits.com. So this is Adam Khoo, and I'll see you soon.